So the Dow Jones Industrial Average went down about 600 points today. It's a fairly big move. It's a little over 2%. Apple and Goldman Sachs accounted for a pretty big piece of that decline. The market was jittery today, and that comes after 2 weeks of relative calm. Apple went down about 5%. There was a report out that one of their big suppliers was cutting their forecasts. So people kind of read through that and say, well, what does that say about the iPhone sales, which is a very, very important thing, not just for Apple, but it sort of is an indicator of what people are buying for tech. Today, that means we also saw a lot of other tech companies just get worse and worse as the day went on. Chip makers especially took some pretty serious blows, and that kind of spread to a lot of the rest of the market. Banks, Amazon took a bad hit today, GE. Ironically, divided governments tend to be positive for the stock market because then it makes it a little slower for big policy changes to go through. The investors actually seemed to be pretty pleased last week with their initial reaction to the election results. That said, they can change. We are looking at a market that's gone up a lot in the last couple of years. And today, as in other days, when you see just kind of a generalized nervousness, you see the biggest drops in the companies that tend to have done the best over the past few years. Apple and Amazon come to mind. Amazon, bear in mind, is up 40% this year alone. So when you're looking to take some money out of the market, that's where you do it. You do it in places like Apple and Amazon.